For the first time in modern history, America's oldest ally has turned against it. Canada, the quiet neighbor, the trusted partner, just joined forces with China in a 500% tariff war aimed squarely at the United States. The world didn't see it coming. In Ottawa, Prime Minister Mark Carney stood before a wall of red and white flags and spoke 12 words that rippled through every trading floor on Earth. Canada will not be a hostage to anyone's tariffs. Within hours, markets convulsed. Wall Street bled nearly $600 billion. Gold surged past $2,500 an ounce. Oil dipped below $70. Economists called it a financial earthquake. But in Canada, it felt like something else, a release, a declaration of independence. Washington called it betrayal. Beijing called it partnership. The world called it history. But what no one realized that morning in Ottawa was that this wasn't a spontaneous act of rebellion. It was the culmination of years of quiet planning, frustration, and strategic restraint. And when the dust settled, one truth became undeniable: Trump's tariff gamble didn't just backfire. It united his rivals in a way that will change the balance of power for decades to come. It began with a signature: Executive Order 14,278. Donald Trump, from behind the Resolute desk, declared that Canadian imports were a national security threat. In a single stroke, Washington slapped 100% tariffs on everything: steel, aluminum, automobiles, and lumber. Nearly $48 billion worth of cross-border trade suddenly trapped behind a wall of American protectionism. Factories from Detroit to Seattle froze. At General Motors, executives warned that component costs would skyrocket by 25%. Ford shut down entire production lines for lack of Canadian steel. Even Boeing, dependent on airframe parts from Quebec, quietly delayed 2 aircraft contracts. It was supposed to be protection, but it turned into paralysis. Across the U.S., construction costs soared 14%, adding $12,000 to the average price of a new home. Small builders went bankrupt. Families already crushed by inflation saw mortgage rates spike. The Dow dropped. The S&P Industrial Index collapsed 3.8% in a week. Trump's advisors called it America First. Economists called it economic suicide. Because when you weaponize trade, your enemies adapt and your allies start looking for exits. Ottawa's response wasn't loud, it was measured. Strategic, and while Washington gloated over its tariffs, Canada was already preparing something far more devastating. And what came next would rewrite global alliances. It was a cold, silent morning in Ottawa, the kind that carries the weight of history before it even begins. The lights of Parliament Hill still glowed dimly as a government jet rolled down the runway. No press, no flags, no public announcement. Just frost on the tarmac and a small team of senior Canadian officials boarding a flight that would quietly alter the course of the world economy. Their destination wasn't Washington. It was Beijing. Their mission wasn't diplomacy, it was survival. Inside the Great Hall of the People, the meetings stretched for 14 hours, tense, strategic, and entirely off the record. Every handshake, every sealed folder carried the same message: Canada was done being dependent. By the time the final signatures dried, a new era had begun. A $200 billion economic alliance that fused Canadian energy, agriculture, and mining directly with China's industrial heartland. Beijing would secure 4.8 million tons of Canadian LNG annually, 15,000 tons of uranium, and over $12 billion in farm commodities every year. In return, China's AIIB pledged $25 billion to upgrade Canada's Pacific gateways, modernizing ports, railways, and Arctic routes long ignored by Washington. For China, it was a calculated triumph: reliable resources without American interference. For Canada, it was nothing short of an economic lifeline. This wasn't just trade, it was transformation. When the world woke up the next morning, everything had changed. On paper, it looked like a deal. In reality, it was a declaration. Canada was no longer waiting for American approval to survive. As one Beijing insider put it, this wasn't Canada joining us, it was Canada escaping them. And in that single night, the quiet northern nation redrew the global map. The reaction in Washington was instantaneous and explosive. Within hours of Canada's alliance with China going public, American media descended into chaos. Fox News blasted headlines calling Mark Carney Beijing's man in Ottawa. Senator Marco Rubio accused him of betraying the continent. Pundits screamed about the collapse of the Western Alliance, warning that this was Brexit but colder. On Capitol Hill, lawmakers traded blame while the White House scrambled for control. Inside, aides described Donald Trump's mood as volcanic. He reportedly slammed his desk, demanding to know, how could they do this to us? But north of the border, the tone was entirely different. Canadians woke up not ashamed, but proud. Editorials across Ottawa, Toronto, and Vancouver hailed the move as Canada's coming of age. Overnight, Carney went from technocrat to national symbol, a leader unafraid to challenge Washington's arrogance. Polls revealed that 72% of Canadians supported reducing reliance on the United States, and 48% believed Carney's policy directly protected domestic jobs. On factory floors in Alberta and steel yards in Ontario, workers voiced a sentiment that echoed across the country. We're not turning our backs on America. We're just standing on our own 2 feet. To them, this wasn't betrayal, it was balance. Meanwhile, in the U.S., financial markets plunged. The Dow lost another 2%, the dollar wavered, and investors began whispering about North America's divorce. Washington saw disobedience, Canada saw liberation. This was more than a trade dispute, it was a philosophical split. 2 nations that once shared everything now stood divided by belief, one clinging to control, the other claiming independence. And for the first time in a century, the northern shadow that once followed America began to cast its own light. The alarms this time didn't come from Washington, they came from Geneva. A confidential report from the International Monetary Fund, leaked to Bloomberg, sent shockwaves through every major capital. Its title was brief but chilling: Continental Realignment with Systemic Consequences. The IMF warned that if Canada and China fully integrated their energy and industrial supply chains, the United States could lose up to 20% of its regional economic influence, a collapse unseen in modern trade history. For decades, North America had functioned like a closed loop: raw materials from Canada, manufacturing in the US, and logistics through Mexico. But after the Carney Pact, that loop broke. The report mapped out a new axis: the Northern Belt, an Arctic extension of China's Belt and Road Initiative anchored not in Africa or Asia, but across Canada's Pacific and Arctic routes. Beijing pledged $11 billion into Canadian nickel, lithium, and uranium, minerals critical to electric vehicles, green energy, and advanced semiconductors. At first, Washington laughed it off as symbolism. But then the markets moved. Brent crude rose $7 a barrel in a week. Uranium prices spiked 14%. And American LNG exports to Asia dropped 9% as Chinese buyers rerouted through British Columbia. The IMF called it a structural pivot of the West. Financial analysts began calling Canada the world's geopolitical hedge, a Western nation trading like an Asian power. Sovereign wealth funds from Singapore, Qatar, and Norway began shifting billions into Canadian bonds backed by critical resources and Chinese infrastructure guarantees. It wasn't rebellion anymore. It was evolution. Even the IMF quietly admitted, the post-American system has begun and its epicenter is north. And with that single assessment, the world realized something staggering. The future no longer ran through Washington, it ran through Ottawa. What began as a political shock soon became an economic disaster. Within just 3 months of Canada's alliance with China, U.S. exports to Canada plunged by over $41 billion. Entire industries that had relied on the cross-border partnership began to unravel. In Michigan, Ford and GM announced immediate overtime cuts. Tool and die shops in Flint and Dearborn froze hiring. Caterpillar's factories in Illinois reported a 17% fall in component orders, while refineries along the Gulf Coast, once fueled by Canadian crude, scaled back production as costs surged. On paper, it looked like a trade dispute. On the ground, it was a full-blown economic contraction. More than 450,000 American jobs, from Ohio steelworkers to Pennsylvania welders, were suddenly in jeopardy. Gasoline prices rose 11%, homebuilding materials jumped 9%, and small contractors across the Midwest postponed projects indefinitely. For families already crushed by inflation, the crisis wasn't abstract anymore, it was personal. In Toledo, a laid-off factory worker told local reporters, "We didn't just lose Canada, we lost our paychecks." Across the country, diner conversations turned bitter. People blamed politicians who had promised protection but delivered pain. Inside the White House, chaos reigned. Trump's advisors pushed for even harsher tariffs, while economists warned it would only accelerate the collapse. Opponents in Congress called it the strategic blunder of the century. And on Wall Street, analysts began using words no one had dared to say aloud in years: trust erosion. For 70 years, America's strength had been built on predictability, reliable allies, and open markets. But in 2025, that foundation cracked. Canada's retaliation didn't just hit American wallets, it shattered the illusion of invincibility. And as factory lights dimmed across the Rust Belt, one truth echoed through the silence: America had finally lost its northern lifeline. As Washington struggled to contain the fallout, Ottawa was already stepping into a new role, not as a follower but as a global broker. The Northern Belt, once a whispered concept in diplomatic circles, had become a full-fledged reality. From Prince Rupert's ports to Alberta's oil sands and Quebec's mineral corridors, a new map of power was emerging, one where Canada wasn't defined by proximity to America, but by purpose. Prime Minister Mark Carney called it neutrality through necessity. Canada, he said, would no longer choose between superpowers, it would chart its own course. That doctrine resonated across the country. In British Columbia, new LNG terminals funded by the Asian Infrastructure Investment Bank promised thousands of jobs. In Saskatchewan, uranium mines reopened to meet Chinese demand. In Alberta, upgraded pipelines carried crude not south to the U.S., but west to the Pacific, where Chinese tankers now waited under crimson flags. Foreign investors noticed. Sovereign wealth funds from Singapore, Norway, and the UAE poured billions into Canadian infrastructure, calling the country a safe Western bet in an unstable world. Economists compared Carney's model to India's Cold War non-alignment, independent, adaptable, and impossible to corner. But power always comes with pressure. In Washington, whispers began: would this new alliance extend beyond trade? Could Canada's technology, energy routes, or Arctic access become leverage in Beijing's strategy? Carney brushed it off with trademark calm: partnership isn't submission, dependence is. For the first time in decades, Canadians saw their leader not as a cautious diplomat, but as a strategist turning survival into sovereignty. And as ships departed from Canada's Pacific coast, carrying resources once bound for America, one thing became clear. The North was no longer following anyone's lead, it was setting the course. The tremors that began in Ottawa soon echoed across the world. What had once been dismissed as a regional trade spat was now being described by economists as the collapse of the old order. For more than a century, the United States had been the gravitational center of the Western world, its dollar the language of power, its alliances the foundation of global stability. But in 2025, that center began to shift north. In the Arctic, shipping routes once patrolled by NATO convoys were now busy with Chinese chartered tankers flying both the Red Star and the Maple Leaf. On satellite maps, the new trade arteries glowed bright: pipelines, ports, and railways linking Canada to Asia, bypassing the American mainland entirely. The Canadian dollar, once pegged to U.S. strength, held firm at $0.76 USD, buoyed by Asian demand and foreign investment. Meanwhile, Washington's influence waned. European allies began quietly reaching out to Ottawa. Japan and South Korea initiated talks on rare earth cooperation. Even Mexico hinted at diversifying its trade through Canada's Pacific gateways. The message was clear: the era of automatic loyalty to Washington was over. Inside think tanks and diplomatic halls, a new phrase began circulating: the post-Atlantic West. It described a world where leadership no longer required U.S. permission, where the West could exist without Washington at its helm. For Americans, it was an identity crisis. For Canadians, it was vindication. After decades of being dismissed as the junior partner, the quiet neighbor had outmaneuvered the giant next door. And as the global order fractured, one truth rang louder than tariffs or treaties: Canada hadn't just survived the storm. It had become the storm. The age of American dominance was fading, the age of the North had begun. Trade wars rarely end with fireworks, they end with silence. The silence of shuttered factories, empty ports, and nations realizing the world has already changed while they were still arguing about it. That's exactly what happened in 2025. Donald Trump's 100% tariffs, meant to make America strong again, ended up isolating it completely. What began as a show of dominance turned into a lesson in consequence, and Canada was the one writing that lesson for the world to see. Mark Carney's defiance wasn't just about economics, it was about identity. For decades, Canada's prosperity depended on America's approval. But when Washington turned its trade weapons inward, Carney didn't kneel, he pivoted. He proved that independence doesn't come from isolation, but from diversification. While the U.S. doubled down on tariffs, Canada doubled down on strategy, forming the Northern Belt, redrawing energy routes, and rebranding itself as the West's quiet power. The world took notice. Europe began calling Canada the stabilizer. Asian investors labeled it the Northern Anchor. Even traditional American allies started whispering, if Canada could break free and still thrive, what was stopping them? In the end, Trump didn't just lose a trade war, he lost the narrative. The U.S., once the symbol of global reliability, became the warning sign of what happens when power forgets patience. And as the Arctic lights shimmered above new trade corridors linking Canada to the east, one truth glowed brighter than ever: the world had tilted north. Because in this new century, power isn't about who shouts the loudest. It's about who adapts the fastest. And Canada, once overlooked, just proved to the planet that quiet doesn't mean weak, it means ready. The age of American control is ending, the age of the North has begun.